Hello, 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 community. Happy Thursday to all of us. Welcome to today's community event on this beautiful Thursday on YouTube Live. For those that are able to make it, we are very delighted having you all here with us today. And as always, we always have a topic ready for us. As you can see, the title gave it away already. Today, we're going to look at blockchain strategies. That's the hottest topic right now on crypto Twitter and other social platforms that we hear how various different institutions are adding value using their traditional infrastructure, using the blockchain technology, implementing strategies, collaborating, and just preparing for all these mainstream adoption that is about to come, and also for this bull cycle that is still ahead of us. So we're going to look at all of this in a lot of detail, and just as always, we're going to look at things in more detail and question things, verify things. So it's a full packed session today. So once more, those that are new in the community, want to welcome you. We are happy to have you here with us today. Those that are always with us consistently, the veterans, we are very delighted having you here with us as well. And before we start, I want to thank you for all the comments. We'll get to them at the end. We'll close out with your comments, with your feedbacks, with your questions, whatever the case may be. As for now, all the tweets are out. The Survivor, Killer Whale, and Bullrun, they're all out. So those that have not engaged with them yet, I encourage us to do so, as it's part of our daily routines to reach as many people as possible, bring awareness to our industry, and also shed some light on our ecosystem. With that said, community, once more, welcome. Happy to have you all here with us today. We are thrilled to go through this session with you today as well. So with that said, let's get to today's topic. Bear with me as I'm sharing my screen, and I will come full circle at the end and then go through your comments with you and read whatever questions you have or feedbacks, and then conclude the session today with that. So with that said, let's get right to it, as there's quite a bit to cover today. So let me share my screen with you. So as always, let's always start with an overview, just a brief overview of the market. I'm sure we are all really aware of this, because we are really glued to these charts just to monitor what's happening. The most obvious right here, we are at 88%. The fear and greed index is really at its peak, as we see here. It's really taking off. It's all about fear and greed. Like we said, it's a very emotional market. And as this chart suggests, we are at all-time high right now. We are peaking as we speak right now. So we're really experiencing extreme greed. That's always correlated usually with a green market. And in this case, it really is. We are way above all-time highs. Last bull cycle, we were at roughly exactly at 3 trillion. Now we're at 3.25 trillion. We see Bitcoin is really surpassed 98K. Ethereum now finally crossed 3,300 as well. The market overall is green. We see high trading volumes, a great indicator as well that the market is really picking up, and there's a lot of activity, a lot of interests going on. Also, in terms of Google searches, new data shows that finally Google has flipped the applications such as WhatsApp and all these, and also actually a wallet, so phantom wallets and all that. So that just shows how much interest is slowly creeping in, and most notably, it's probably based on the Bitcoin price that is going up. So whenever Bitcoin price is picking up, it brings a lot of attention, a lot of noise, a lot of mainstream adaptation and awareness as well. So with that said, This is just to briefly touch on the current market situation as we are. And now, also briefly, if you see dominance, Bitcoin dominance is hovering around 60%. This is massive. This is really massive. It's incredible. Uh, Ethereum has actually dropped so far. It's back to 12.44. However, in the last few days, it's been picking up, especially today. It picked up a lot. It was below 12%. So with that said, community, let's touch on some news, some current events that really directly actually affect us, or in a positive way in this case, of course. And let's look at some current news that just dropped today and see what it means. So if we look at Circle right now, is launching, USDC is launching. Circle is obviously the USDC stablecoin issuer. So they're launching on Aptos. Aptos is one of the leading blockchains, actually. And also Stripe is also on board, because we know what Stripe is all about. Stripe works close together with, it's just another payment processor such as MasterCard, Visa. Stripe is really up there. So whenever you do your online purchases, e-commerce, Stripe is the go-to place, right? For those who are not familiar with Aptos, let's look at where Aptos is. Aptos is actually the 23rd, last time I checked, 23rd largest blockchain right now, right? It's the largest cryptocurrency, 23rd largest cryptocurrency in the space. It's up and coming. It's one that is also still has a very active community, still fairly young, but is one of those up and coming blockchains as well. If you go to About Us, you see that they've just, it's another proof, it's a layer 1, it's not a layer 2, so it's really a proof of stake layer 1 blockchain as well. Of course, they're all based on smart contracts, and they just launched in March 2022, so they're very, very young, just 2 years old, 2.5 years old. And this is why this news is actually huge, because as we see here, let's go back up, it's just a 2-year-old blockchain. It's a layer 1 blockchain, and they've chosen USDC to be the primary stablecoin that they're going to use. As we see here, like we said, along with Stripe, we know that Stripe is a support for on and off ramping. It's going to streamline payments and boost decentralized finance. We'll get into this. This is a bold statement. It's supposed to boost DeFi. We're going to verify this statement. We're not just going to leave it like that. But USDC, right, we know it's a dollar-pegged stablecoin issued by Circle at 37 billion market cap right now. Like we said, currently it has 160 million bridged USDC on Aptos, making it the most used stablecoin on the network, right? But keep in mind, these are bridged. But now the good news is that the USDC will be now natively issued directly on Aptos. So this is amazing news. Of course, this is great. And since this will drive more liquidity to the blockchain, and since it's a fairly young blockchain, and already USDC is the most used stablecoin, that's amazing, right? Just like Solana also has USDC as the most used stablecoin as well. But we'll have to verify all of that, right? So of course, it will be cross-chain nonetheless. This will allow applications on Aptos to send USDC seamlessly to and from other blockchains, such as, of course, mainnet Ethereum, Solana, and Base as well. So this will drive a lot of liquidity in and from the Aptos blockchain, since it's only a roughly 2.5-year-old blockchain, and it's already chose USDC as its preference. This is amazing. There's another use case for USDC. The more USDC is being used, the better for us as well, because we are not only paired, but we're also issuing USDC as distributions. Also, this, of course, strengthens the dollar again, even more, the digital dollar. and it just brings more demand, and this causes more US debt to be backing the USDC stablecoin, right? And the more that happens, the better for us, because we don't need a new currency. We don't have to reinvent the wheel. There is already a currency here. Actually, what the digital world needs is literally an asset that is extremely liquid, that can be used as a collateral, right? And that is sustainable, efficient, and that also, if used to sustain, or rather to stabilize the ecosystem, issues also USDC some sort of rewards, right? Not preferably not your native, but as long as it's sustainable, that's very important as well. Incentives are always key drivers for individuals or for institutions or whatever the case may be to use your platform. So incentives, if they're sustainable, it's very, very important as well. So that's that for USDC being launched on Aptos, the 23rd largest blockchain, merely 2 years old. Imagine within 2 years, they're already in the top 25. So this is a great move by them. And if we go further here, there's another news that we can read here. And this is MasterCard, right? This just came out today, November 21st. So MasterCard and JP Morgan, they're teaming up for better blockchain payments. So keep in mind, we are talking about two relatively traditional financial institutions. These are market leaders. We all know MasterCard. And JP Morgan, we all know JP Morgan, right? So these two giants are teaming up together to facilitate blockchain payments. So as always, there's always a reason that institutions are doing things. And it's always strategic, and it's also to address challenges, right? So we're going to look at that briefly. So let's start right here. So MasterCard's multi-token network has integrated with JP Morgan's Kinexys digital payments to improve the efficiency of business-to-business cross-border transactions, right? So it's all about efficiency. Right now, obviously, nothing is efficient in the real world. It's based on business hours, business days, right? Monday to Friday, business hours, banking hours, and it's really inefficient, right? And now using the technology and using these infrastructures built on top of the blockchain technology, this collaboration enables mutual customers to use a single application programming interface, also known as APIs. These are interfaces that you can plug and play, such as the one we talked about, Stripe. You can add it to your website if you have like a commerce website, and it helps you to seamlessly process and settle payments, right? And this enhances the speed, transparency, and global business payments, right? And what we need to understand here also is that this will be all in real time. This has never happened before, right? Usually it's so inefficient, the real world, that they usually batch transactions and then process them like by the end of the day. But here it's all in real time based on the multi-token network platform by MasterCard, and then in works with Kinexys, which is JP Morgan's payment rail. So you see that they're always here to solve challenges. Don't take my word for it, right? Again, Kinexys utilizes blockchain technology to what? Facilitate direct, near instant transfers between commercial banks accounts. Now, keep in mind, this is not for you and me. This is the multi-token network platform. So this is just for commercial banks. So this is amazing. Usually, banks, even interbanks, it takes time for them to process, to settle, but now this will be very instant. Now, like we said, why are they doing this? It's always to address key challenges. If you're not solving challenges, if you're not solving problems, if you're not bringing solutions, what are you doing, right? So in this space, everybody you see coming in, mostly financial institutions, traditional institutions, they're always here to address key challenges. Does this sound familiar? If you're not in the industry to address challenges, then you're wasting everybody's time. Then you're not part of the solution, but rather you're part of the problem, right? So anyway, they're here to address challenges in cross-border payments, such as delays, like we said, time zone discrepancies, and limited transparency, right? These are the key challenges that you experience in the cross-border payments industry, and they're here to address those challenges, right? So this is MasterCard and JP Morgan, and it just talks about their network, multi-token network. It offers businesses a tool to develop innovative financial solutions, etc., etc. And most importantly, let's understand why. What are they doing? What are these challenges that they are solving? Also, okay, automation of processing our payments, automatically. And surprise, surprise, of course, it's because of liquidity, right? They have to optimize liquidity and then also be more efficient, right? By reducing operational costs. So it will be more efficient, it will be more liquid, right? And it also be automated. So those are the pros, those are the challenges that are being solved by these large financial institutions, and they are bringing their traditional infrastructures using the blockchain technology to solve these challenges, right? And more benefits here are like for firms, so companies conducting frequent international transactions, the ability to settle payments 24/7, even on banking holidays, provides a significant advantage, right? So this is exactly what we were talking about earlier. This will be opening a whole new world for traditional institutions because they're not used to being open 24/7. Of course, this will bring more revenue to them. This will cut costs, like we said. This will be bring more liquidity, obviously, and also it will be automating processes. So you don't need employees to be there, but using the smart contracts, all these things, obviously it's on Ethereum, by the way, needless to say, all these things are obviously on Ethereum. JP Morgan already has their Onyx, the collateral network also is also on Ethereum. So obviously to automate, you need smart contracts. So that's another thing as well that we need to understand. Now, the natural question you might ask yourself, well, Steve, it's good to have this infrastructure. It's good to have this multi-token network. It's great to see that MasterCard and JP Morgan are teaming up, but what are they settling in? What stablecoin are they settling in, right? So needless to say, of course, MasterCard tapped Circle for USDC settlement. Of course, they're using USDC. What else, right? It's the largest, most regulated. It's the largest regulated stablecoin, right? They have the MiCA licenses to operate in Europe. They're also their reserves are governed and managed by the largest asset manager, BlackRock itself. Their Circle is a regulated company as well, and they're also applied to be a public company right now, and so on and so forth. And MasterCard chose USDC for settlement. This was back 2 years ago. Actually 3 years ago. It was back in 2021, and this was back when they were doing piloting. Keep that in mind. This was like pilot stage. This article is today, and the piloting is over, and they're literally using USDC specifically. And as you see here, the payment solution deploys a proprietary settlement engine that processes. This is the most important thing, right? This engine processes all payments using USDC, period, right? It's a partnership that they have with USDC, and it works directly with MasterCard to enable settlement, right? Of course, they're accepting deposits in a number of stablecoins, including rival stablecoin USDT. We all know that this stablecoin doesn't exist anymore. So it's not. Binance BUSD was discontinued. However, all the deposits will be automatically converted into USDC at no cost. So you can, if you only have USDT, of course they'll take it. but it will be automatically converted to USDC because USDC is the primary stable coin that is going to be used by these infrastructures, by these rails of between JP Morgan, MasterCard. Now, the natural question that you might ask right now is that, well, MasterCard is the second largest payment processor. What about Visa? Well, Visa has been already. They actually were the first. MasterCard is behind. Visa already became the first major payment network to settle transactions in what? In USDC stablecoins. So they were already there. So with the direct acceptance of payments in USDC, Visa forged new connections between digital and traditional currencies. And all of this is like over 4.5 years ago. Visa already, they've been using USDC. So this is nothing new. They had a partnership with Crypto.com where you could deposit directly from your bank account and you receive USDC directly. So, and right here also, like a stablecoin backed US dollar to settle transactions with Visa over Ethereum, right? One of the most actively used open source blockchains. It's just a confirmation. Of course, they're using Ethereum, right? These infrastructures are built on top of Ethereum. And this is why you'll realize quickly that actually, let's verify. Let's not just talk about it. Let's really verify this. If we go to DeFi Llama and we see stable coins, right? The total stable coins used is roughly 186 billion in total. And if we look at Ethereum holds more than half of that, like almost 100 billion, 98 billion out of the 186. So way more than 50%, close to 55%, more than half, way more than half of stablecoins are on Ethereum alone. And the second largest is actually Tron. Tron has 59, even if we round it up to 60. So Tron and Ethereum combined have roughly 160 billion in stablecoins out of the 186. So only 26 billion are distributed between Solana, Binance, Bitcoin, Base. Bitcoin doesn't have any stablecoins. So no, that's not true. So if you look at total value locked to identify the most liquid blockchain out of the 111 billion, even if it's 112 billion, if we round it up, you quickly realize that Ethereum has, again, way more than half of that is on Ethereum itself. So you see here that these stablecoins, indeed, specifically USDC, has been partnering with the largest payment providers, Visa, like we see here, right? So Visa is using USDC. We see MasterCard, they partnered, right, with USDC. We see Stripe, like we saw here, like JP Morgan and them, obviously when they're using MasterCard, MasterCard's using USDC. So this just gives USDC JP Morgan clients and all their banks and affiliate banks to be able to transact on and off ramp in USDC as well. And of course, also we see how Stripe is heavily involved with USDC as well. So all these things are great for us community because it just gives us additional utilities for USDC. And also the better USDC is well adopted, has infrastructures between traditional world and the DeFi sector. This is good for us as well, right? So one thing I say that we need to verify is this right here, right? Streamlining payments and boosting DeFi, right? So how is USDC boosting DeFi? Let's verify this. This is very important to understand. Let's not always just read things and take it for the face value. Let's verify this fact. Is USDC really dominating DeFi payments? Let's check this. Good thing is that in blockchains, you can really verify a lot of things. Now, sites such as CoinMarketCap, they are getting all this data from, obviously from Etherscan, right? They get them from Etherscan. from the blockchains directly, and then they just connect them to these sites. So we can check this by verifying that way. So what are we verifying? Let's see how much, who has the most DeFi usage, right, on the blockchains. Let's just, for the sake of time, use these top 5 cryptocurrencies, right? There's a way how you can check how much volume. Look at all these volume, massive amounts of volume. And USDC is known for boosting DeFi, right? It's here to boost decentralized finance activities. So let's verify that. Let's start with Bitcoin. If you look at Bitcoin, if you come to CoinMarketCap, over here where it says volume, if you come right here, it will show you, it will divide the volume between centralized exchange volume and DEX volume, right? This is what you want to compare. You want to look at how much volume out of this 100 billion in volume, how much is in centralized exchanges and how much is in decentralized exchange, right? So we quickly see that 100 billion is of trading volume for Bitcoin is on centralized exchange, and only 153 million is on decentralized exchanges, obviously because DeFi, Bitcoin is not big in DeFi, right? So you could argue that, oh, maybe because Bitcoin is not big in DeFi, this is why, right? But you'll be surprised. So anyway, this is why we always say we tackle the liquidity challenge community, because as you clearly see, this is less than 0.1%, 0.1% of the entire volume, which is 100 billion, is being traded on DEXs. This is horrible. Wasn't Bitcoin exactly developed for this purpose, right? Let's look at it. Let's look at this. Remember this article right here. Why was Bitcoin created in the first place, right? Why was it created in the first place? It wasn't created so that everything will be volume and trading will be happening predominantly on centralized exchanges, but rather it was to increase trust by removing trust, right? And how do you remove trust? Through proof of work, proof of stake. That's how you remove trust. But if you're bringing on centralized entities, and then we verify and see that majority, actually 99.9% of the volume is being traded on centralized exchanges, this defeats the whole purpose of Bitcoin. Is synonymous with the blockchain technology, right? And if we see here, the actions of financial institutions leading to the 2008 financial crisis resulted in a lot of blame and distrust, right? Meanwhile, the actions of central banks made many experts feel that the global economy had become too dependent on financial institutions. Now, this is the dilemma. So who runs the world? Basically, these two phrases just shows us who literally runs the world. It's the banks. So much so that even central banks are too heavily dependent. They're too dependent on these financial institutions because they're the ones literally having all these trillions and trillions of dollars, as we will see as we progress through this session today. And actually, let's look at it right now. Look at these institutions. Look at MicroStrategy itself. Its holding are now worth 15 billion. They're actually 15 billion in profit right now. They spent roughly 15, 16 billion, and now there are additional 15 billion in profit, right? And you read things like this, like just now in spot Bitcoin ETF surpassed 100 billion. Actually, it's more than that. It's almost 120 billion right now, and it's closing in on 6%. So 11 institutions, asset managers, are literally own 6% of all the supply. What's going on? You know, this is not what it was supposed to be. So Nakamoto, who is obviously Satoshi Nakamoto, the founder of Bitcoin, alternative, he had a solution, right? And this solution came along just at the right time, right? What a coincidence. And it's part of the reason why Bitcoin and other cryptocurrencies skyrocketed in popularity, because they promised that, hey, after the financial crisis, we don't have to blame and distrust anymore, because this new technology is going to bring us freedom. We don't have to rely on third parties. We don't have to rely on institutions and all of that, right? Furthermore, Satoshi Nakamoto's idea was a reaction, actually, to the many challenges people were facing in the economy. Keep in mind, he was all about solving challenges. Solve challenges. And his challenge that he wanted to solve was that he wanted something that is more powerful to replace traditional system with something people could trust more. And this is the technology itself, right? So we actually took a step forward, and now we're taking 100 steps back by allowing all these institutions to literally take over, right? And look at how many institutions that BlackRock is actually representing. But we'll get into more of this as we progress. What I want us to really understand before we go too far, let's take it a step further back again. Keep in mind, what are we talking about today is strategies, right? All these institutions, like we see the Visas, the JP Morgans, MasterCard, Circle, these are all established financial institutions. The MicroStrategies, all of them, they're all here to solve challenges, like we read. They're here to bring real-world solutions, add value, right? At the same time, they're using their established infrastructures. So you have to ask yourself, we as natives, what are we doing, right? What are we doing? Are we adding value, or do we have to sit on our hands and let established traditional institutions to be the ones bringing all the solutions to us, handing all those solutions to us? We have to add value as an ecosystem. As native crypto natives, we ought to be developers of platforms that are actually part of the solution, that are adding value, that are addressing challenges, right? Just like all these financial institutions are already doing. So another thing that we want to look at, now that we've read things like this, right? MicroStrategy. This is the biggest news everywhere. How MicroStrategy's strategy and how they are moving along to keep piling up more debt and to use that to buy even more Bitcoin, right? They're either issuing bonds, which is debt, and or taking, that's how they take debt, they issue debt for themselves at a very low rate, right? So now let's look at this even more clearer. Let's look at this closely. Here is that, keep in mind, we want to hear, like, what's the strategy? What's the strategy here? And how are these institutions trying to position themselves to be on top, right? And always keep in mind that also why Bitcoin and the blockchain technology was developed in the first place. We always have to keep this in mind, right? So now that we talked about that briefly, of course, between November 11th and 17th, MicroStrategy spent 4.6 billion. This was actually on Monday. On Monday, MicroStrategy purchased another 4.6 billion. This, of course, caused the share price to jump up by 16%. And it brought a lot of excitement. The markets even were, skyrocketing, and so on and so forth, right? Everything seemed to be like just exploding. So there were some quotes out of an interview that was made by Michael Saylor. And I just want to name one or two. It's really interesting. And I just want us to bring more clarity on this. For example, when he was saying here that when a trader far away in Singapore trades $5 billion in Bitcoin, it will push up the Bitcoin price and you will automatically benefit. This is obviously not true. First of all, there is no 5 billion in liquidity, right? There's 2.1 billion in on spread across various trading platforms, right? So let's understand that there's not enough liquidity to trade 5 billion. So this statement is just outright wrong. And such large tradings are not happening on centralized exchanges anyway. That's the only place it will directly push up the price. But these trades, such large trades, are happening OTC, over the counter, right? And what we need to understand is that the beautiful thing about blockchain is there are ledgers, and you can verify those ledgers. This is what we started doing here. This is why we were showing you how much trades are actually happening on centralized exchanges and not on DEXs. But besides DEXs and centralized exchanges, there are over the counter as well. And most of these trades that are happening here, they're not on chain, they're off chain. So this statement is absolutely wrong. It doesn't affect the price. It doesn't push it up. It doesn't. That only happens if you're on one single pool. This is what we were trying to show you here. There is not a single pool. Like Bitcoin alone has several pools. There are several centralized exchanges, not just one. And then there are also several decentralized exchanges. So if you look at markets, right, these are the centralized exchanges. So there are various different pools. Look how many pools that there are, liquidity pools. And the prices, if you pay attention, they are different. So they cause arbitrage opportunities where people can buy from the cheaper exchange liquidity pool and then sell it on the higher one and generate revenue that way. You can't do that with $100, obviously. You know, it's only beneficial if you have like tens of millions to spend, and then these little differences in arbitrage you can benefit from them. But the bottom line here is that there are different pools, liquidity pools, and over the counter is not on chain, it's over the counter. So all these large trades that we see happening on a daily basis, they don't affect Bitcoin price directly. There are different pools. And even on chains, like we see here, like we saw, what we're trying to show here is that, can you imagine that less than 0.1% of the 100 billion that is being traded on centralized exchanges are actually traded on DEXs? And what are we trying to prove is that USDC has taken it upon themselves that they really want to boost DeFi, right? They really want to boost DeFi, boosting decentralized finance. And let's find out how they're doing that. And is it true? Are they really the dominance in DeFi? So like we saw, Bitcoin only has, out of 100 billion, only 0.1% is being traded on DEXs. This is horrible, especially for a cryptocurrency that is supposed to be for the people, right? That is supposed to be not mingling with the intermediaries, and that is actually supposed to, since 2008 financial crisis, be the result, be the solution, right, to us. Bitcoin is supposed to be the solution. Bitcoin and other cryptocurrencies, right? This is why they became so popular, because they were supposedly the solution, so that something that we could trust, the people could trust, to replace the traditional system. And this has backfired. This is not what's happening right now, community, right? And this shows us right here as well. We see that centralized exchanges are trading way more, 99.9%. Let's go to Ethereum, for example. If we look at Ethereum, you will say, okay, well, Ethereum is the largest smart contract, right? Blockchain. Surely Ethereum will have a lot of decentralized exchange trading, right? Wrong. Actually, it only has 100 million more trades going on decentralized exchanges. Similar to Bitcoin, the most Ethereum is actually traded on centralized exchanges. Remember, one of our 4 pillars is lack of liquidity. So who trades more on decentralized exchanges? Us, the retailers, the people. We trade mostly on decentralized exchanges, right? But the second question we'll have to ask ourselves, why are so many trades on centralized exchanges? We'll answer that question shortly. But actually, majority of people, the regular people who still believe in decentralization, self-custody, and all that, they're using decentralized exchanges. So we saw that Ethereum also only has 250 million in trading volume on decentralized exchanges. Now, another interesting thing is you might say, well, surely Solana has a lot of decentralized exchange tradings because they have the pump.fun and they have all these meme coins that are driving up the price. Surely Solana will have a high decentralized exchange trading volume. You'll be actually disappointed. Solana only has not even 1 million, 700,000 in decentralized exchange. Majority is on centralized exchanges. 10 billion is on centralized exchanges. Only 700,000 are on DEXs. This is a shame. And this just verifies what we always say, that there's a lack of liquidity in DeFi. So this just shows you the lack of liquidity that is actually circulating within decentralized finance. This is why Circle is so stablecoin, USDC stablecoin is so dominating in terms of having all these partnerships with MasterCard. They're not only dominating in the real world, partnering with the likes of MasterCard, JP Morgan, Visa, Stripe, and all of them, but they're also dominating DeFi. But before we go to that, we saw how Solana is really weak on DeFi as well. So you would think that, what about Tether? Surely Tether, the largest stablecoin with almost 190 billion in volume, 130 billion in market cap. Let's look at how they're doing in DeFi, right? They're actually amongst the two only cryptocurrencies that are above 1 billion, right? So out of the 187 billion in volume that is on centralized exchanges, only 1 billion is on DEXs. So this is roughly 0.7%, not even 1% of the trading volume that Tether stablecoin is experiencing is on decentralized exchanges. Again, there's a lack of liquidity on DeFi. Now, keep in mind this number, 1.3, right? So 1.3, we can even round it up to 1.4 billion on decentralized exchange. Now, this is the largest stablecoin, the most liquid stablecoin. Now, let's go to Circle, which is like 5 times the size, smaller than Tether. Let's see if we can verify this statement. Are they really boosting DeFi? Let's find out. So if you go to Circle and you look at this number, you'll be surprised. They have twice as much trading volume on decentralized exchanges. So they're used more than twice as much in DeFi than the largest stablecoin, Tether. So you see that not only is USDC dominating in terms of traditional infrastructure partnerships, such as with MasterCard, Visa, Stripe, and so on and so forth, and also paired with BUIDL, the tokenized token for BlackRock to provide liquidity for all these tokenized assets, but they're also twice as active in terms of DeFi. So we are able to verify that indeed amongst all cryptocurrencies, Bitcoin, Ethereum, the stable coins, USDC has double the trading volume on decentralized exchanges, more than Tether, which is has 5 times the market cap of USDC, right? Why is this so important to us? It's because we are all about DeFi, right? So if you go to markets here, you quickly realize that USDC, they are having, you see that they have Uniswap and Curve and Orca. These are 3 in the top 10 DeFi wallets. Actually, Aerodrome also. So they have 1, 2, 3, 4, 5. In the top 10, USDC has 5 still decentralized exchanges trading USDC, right? And if you go and do the same for any other cryptocurrency, you will not see that, right? You will not see that. And even the 28, you will not see that. Even if you go to Ethereum, Curve is the only decentralized exchange that you'll see. So why is that so important, community? It's because the whole idea of blockchain technology was to replace the traditional system. It was to replace the traditional system with what? Something that people could trust, the technology, proof of stake or proof of work, right? That was the whole idea. But now we see that the whole mythos, the whole idea is being thrust, because you see that traditional institutions like MasterCard, Visa, JP Morgan, they're the ones, BlackRock, they're the ones taking over, right? MicroStrategy, they're literally taking over, and they're the ones literally dominating this space. Well, Steve, that's a tall order. Verify it, right? I'll gladly do that, gladly. Keep in mind, look at the topic here. Bitcoin has its own 1% who control outsized share of wealth, right? So Bitcoin is always looked at as the most decentralized cryptocurrency and all of that, right? However, let's look at this article. It's very interesting. So cryptocurrency has been touted as a new form of digital money, right? Not tied to government or a central bank, and is therefore inherently free from bias and unequal distribution, right? This is exactly what we were saying, something different. It's free of financial institutions and all of that. That's what it's supposed to be. However, a recent study by the National Bureau of Economic Research suggests that Bitcoin has developed into its own group of 1%ers who will likely reap the most gains of the coming years. So let's look at some specific numbers here. So the NBER, which is the research institution that did this study, found that the top 10,000 Bitcoin investors own a combined 5 million Bitcoin, right? That's way more than even currently. That's like 4 times more than 4 times more than even the current ETFs are holding, right? So anyway, the top, they own the majority, just 10,000 Bitcoin investors. And there are hundreds of millions of investors, Bitcoin investors. But the top 10,000 combined, they hold that much, right? That's over 230 billion worth of recent prices. But to put it in perspective, let's look at what that means. Those top players represent a mere, not 1%, 0.01% of all Bitcoin holders, and yet they control over 27% of the digital currency, right? What is this telling us? This compares to the old-fashioned dollar, where the top 1% controls 30% of all US household wealth. So now, due to all of this, we are experiencing the same thing in the traditional world, but now it's on the blockchain. So same thing again. But this time it's even worse. It's 0.01%, not even 1. So this 0.01% is controlling 27. So 100 times less are controlling almost the same amount percentage-wise of the digital currency Bitcoin. At least in the real world, it's top 1% that is controlling 30%, right, of total US household wealth. So why are we mentioning all of this? Is to bring clarity on that. Okay, whenever you see this happening and everybody's clapping and giving a standing ovation and excited, always keep this in mind, that you're just the top 0.01% are the ones that will end up benefiting from it, because it's just like the old-fashioned dollar where the top 1% is controlling majority. Same thing. And who is this 1%? It's obviously the MicroStrategy, it's the BlackRock, it's the JP Morgans, like we see here, and these all other traditional financial institutions, right? Like we see here, they're all represented by BlackRock, right? BlackRock represents all of them: Google's, Amazon's, all these various banks, pharmaceutical companies. They're all represented by them. BlackRock owns all of them based on shares that they hold, right? So now that we've looked at that community, one thing I want us to highlight here as well. I want us to highlight one thing here. If we focus on the strategy that MicroStrategy is using, is applying right now, let's focus on one thing. Let's briefly look at something. The topic is strategy. Let's now get into the strategy of things, right? So MicroStrategy is the topic of, they're the largest, biggest topic right now. Everybody's talking about them, and rightly so. They've been just outpacing everyone. So MicroStrategy is they're doing a strategic buy, right, to capitalize on Bitcoin's outperformance. And what is MicroStrategy? For those who don't know, are not familiar with them, they're actually a very small, unknown, but very profitable nonetheless, tech company, right? And they've spent the last few years accumulating Bitcoin. That's what they're most famous for, on its balance sheet, of course, right? And they're also using a very well executed financing strategy, also known as hedging, right? So they hedge themselves, and the only way you can hedge is using traditional instruments, financial instruments such as futures trading or options trading, right? And this is why when you see options being green lighted, approved, like it was this week, and also like futures have been around for much longer. Futures, you can trade futures without selling the asset itself. So you're actually trading just contracts without having to sell the real deal. So this is why when Saylor says, well, I'll never sell Bitcoin, well, of course he doesn't have to, because he's trading, you're using futures, right? So you don't have to sell it. And they're doing arbitrage. That's how they really generate revenue. But let's continue. So this approach supports how MicroStrategy has been really outperforming even Bitcoin itself, right? And let's look at some things here. I just want us to look at some key points here. Right here. So before, MicroStrategy was primarily a data software company, right? And it helped customers to make informed decisions. So it used to analyze the data, large data sets, and then it used to, from various different sources, and then it used to give them in bytes and digestible information, right? And that's actually the business that they were in. They're still in. But mostly, however, facing strong competition from powerful players like Microsoft and Salesforce, its core business was struggled to grow. About 4 years ago, then, the company opted to be aggressively investing into Bitcoin. And this led the CEO, Michael Saylor, to be a strong advocate for cryptocurrencies, right? Specifically Bitcoin. So what we need to understand, the takeaway here is that just as records and CDs gave way to the digital music, they believe also, we all believe also, that cryptocurrencies in general, but in this case gold and other traditional physical stores of value, will give way to Bitcoin, right? And this is why 38% of MicroStrategy's market cap is represented by Bitcoin holdings, right? And so far they've spent roughly 14 to 16 billion, like we said, and they're up also roughly just double as much as they spent, right? So what we need to understand here also is that this company generates also income. So they're a very profitable company. They generate roughly over 100 million in Q2 alone, right? So we need to understand that as well. And also, as a result of over the past 5 years, MicroStrategy shares have appreciated by nearly 1,200%, right? And these charts show us how they've been really outperforming using these strategies, specifically the blockchain technology, Bitcoin specifically, right? And you see how they've been outperforming even Bitcoin itself. If you see here, this is in comparison, let me go back. This is in comparison to the top performing stocks, right, in the S&P 500. NVIDIA, we know here, and is the largest ones, and they've been outperforming all other ones in different industries too, like this petroleum, and we have oil, we have pharmaceutical, we have AI. So these are all different markets, and it's been outperforming all of them. Even if we divide them in different assets such as Bitcoin, the S&P, NASDAQ, gold, silver, and bonds, MicroStrategy has been outperforming, right? Even big techs company like Google, Microsoft, Apple, so on and so forth. Even software companies that are usually like Microsoft, that are really profitable, they still had no chance as far as performance-wise to MicroStrategy. Now, why are we mentioning all of this? Why is this so important? Why are we mentioning all of this? Is to identify that a few years ago, right, when high inflation and rising interest rates were made it more expensive for the company to issue new debt. This strategy only works with debt. So it's obviously MicroStrategy is using the traditional monetary system, obviously, which is debt driven. So this is the strategy that is being used using Bitcoin. So you, instead of embracing Bitcoin for its original purposes, you're actually taking Bitcoin away from decentralization and bringing it, introducing it into the traditional financial markets and using the monetary system also that is already existing, the old ways, to help Bitcoin to be actually better. Remember, in our last community event, we had an entire session dedicated to this, right? The promises between Bitcoin and retail investors. Remember the last 15 minutes of the session when I illustrated this love story, right? This love story that went wrong, that the broken promises that were not kept. This is exactly what's happening between Bitcoin and retail investors, right? We are going back to debt-driven monetary system, using Bitcoin as a debt instrument to accumulate more and then just use that feedback loop, right? But what's important here to understand is that this works great as long as Bitcoin price is going up, right? It's a great strategy as long as everything is going up. Because during the last winter, crypto winter, in early 2021 to early 2023, MicroStrategy actually plummeted as much as 86%. So we need to also keep this in mind, right? Because just like everything is going up right now and hitting all-time highs, keep in mind, this is not going to last forever, right? Everything that goes up will come down, especially if it's not built if it's built based on the old traditional monetary system that is debt driven, right? Debt is never sustainable, and you can't scale debt. Eventually, there'll be an issue, especially in a market that is cyclical like this. Every 4 years, there's bull bear market based on lack of liquidity, like we've been discussing and we've demonstrated here, seeing how much liquidity is, how less liquidity is in decentralized exchange in the DeFi space, right? And this is exactly what actually Circle is addressing here in partnership with MasterCard, Visa, and all of them. They really want to boost decentralized finance, right? So now that we've discussed that community, and now that we've identified that 0.01% of all Bitcoin holders control 27%, we're actually reliving the real world, the old-fashioned dollar, the real world, that is the top 1% is controlling 30%. So in the digital world, it's already worse than it is in the real world. And we see this because DeFi is not getting enough liquidity. So if you see us stressing so much on not being listed on centralized exchanges and accumulating liquidity based on, on decentralized exchanges to bring to address this lack of liquidity challenge, it's very important. It's key, right? So the takeaway here, community, that we want to wrap up before we move on to something else is that just as everything is going up, once the bear market comes, it will also drop drastically. But now, what's the takeaway here is this. Exactly. So MicroStrategy, they use debt, like we said, to increase more Bitcoin holdings, right? And it's been effectively executed, and it works perfect right now because it's outperforming right now, right? But we also see that it can go the other way, right? It can go the other way once the bear market starts hitting, once the liquidity dries out. Because like we saw here, when high inflation hits, right now inflation rates are being cut, right? It's optimal, it's great. But once the high inflation kicks in and the rising interest rates are made, it's more expensive for the company to issue new debt or roll over the existing obligations. This is now going to be a different picture. And this is something that we have to pay attention. And if you go through the same monetary system, using the same monetary system and not doing new things, like not being groundbreaking and finding new ways, using this technology to improve the current monetary system, then we're actually not improving anything. We're just moving over, using the technology, but not for its original purpose. Now, what I want us to see here also is this. While the current strategy is working, it's not guaranteed to work forever. This is exactly what we said, right? Bitcoin is extremely volatile, and it's possible the price falls rapidly if MicroStrategy stock drops, right? That can create a situation where the stock is underwater on the value of Bitcoin holds. Now, the way MicroStrategy works is the more its stock price goes up, they keep diluting the shares and then issuing bonds, right? They issue debts and then they use that debt to purchase even more Bitcoin. That in turn will push up the price even more. They'll be able to issue even more debt, right? Like it says here. And and once that happens, once that stops, that can create a situation where the stock is underwater on the value of Bitcoin holds, and the biggest buyer of Bitcoin, which is MicroStrategy, will stop buying. And that feedback loop is not going to work anymore, right? So, and with leverage now being used in big numbers, the downside risk is just as big as the upside potential, right? Now we see the good things, right? Bitcoin price keeps climbing. We are in the early stages of bull run. It's great. This is a perfect condition. Interest rates are being cut. Issuing debts is cheap. All that works great right now. However, long term, it's something that obviously, based on what we've known already, based on even the US government itself, we see that this is something that pushing on or leveraging on debt is long term is not something that is really sustainable, right? And this is just something, the last thing that we wanted to make sure that we highlight here. But now, what are we saying here? We're seeing that, like what we said earlier, not only MicroStrategy has inspired a lot of people, so much so that actually next month, Michael Saylor is actually going to have a 3-minute talk to the board of Microsoft. Keep in mind, MicroStrategy was a company that just started when it was at 111 million market cap, right? It was just 111 million in market cap when it started. Now it's it crossed 100 billion in less than 4 years. 4 years. So it just shows you how rapid it's been growing. And this has brought a lot of attention, obviously. And 2 days ago, it was the third most traded token. And stock on Tuesday. On Wednesday, yesterday, was actually the most traded, right? Way more than Apple, Microsoft, and Nvidia. So this is something that is working extremely, extremely great, right? And this is something that we need to understand. And this obviously attracted more individuals also, such as Microsoft, and look at the other ones that are potentially also other giants, right? Such as Microsoft, Apple, and Google. They'll also be able to view Bitcoin as a superior alternative for cash reserves. Why? It's because they have, like Microsoft alone has a holding of 78 billion in cash. So what are they going to do with it? So we'll slowly see that these institutions that BlackRock is actually representing, amongst them is Microsoft, obviously, Amazon, Google, all of them. Potentially, there might be a way how they are going to enter the space. And we'll see even more headlines such as this, or such as this, right? That Microsoft is next, Google will be, and then Apple, and all of that. And it will cause a lot of excitement, right? And stocks will be flowing up and all that. And we'll see 4.6 billion purchases and all of that. However, how is that affecting us as an industry? Because all of this volume they are traded over the counter. None of this is traded in DeFi, like we saw here. This 100 billion, 0.1% is in decentralized exchange. It's not benefiting anyone. Besides, now we know that we're even worse off than we are in the traditional world, because at least the top 1% holds 30%. With Bitcoin, it's 0.01% that holds 27%. So we find ourselves back to square one where we were in terms of Bitcoin holders, right? Who control all these wealth. And like we saw, Bitcoin dominance is at 60%. So if you control Bitcoin, obviously you already control 60% of the entire wealth. And then Ethereum is next. You control over 72%, 73% of the entire industry. So you have to keep that in mind. Another thing that I want us to highlight is, again, we have to keep in mind the original purpose, right? What's the original purpose of Bitcoin? We always have to keep this in mind. It was from the original vision. Bitcoin has obviously shifted from its original vision. And we're not going to go into details. We dedicated a whole session last time between the love relationship between Bitcoin and retail investors. And we identified that the promises were broken there, and they're not going to be amended anymore. It won't be able to work. Right now, institutions are the ones literally dominating the industry, right? Now that we've discussed all of this, and now that we've identified all of this, and we see clearly that based on this chart and this data and this research, that 0.01% of all Bitcoin holders are controlling 27% of the supply, we also identified that majority of these cryptocurrencies, actually the top 5 of them, they're all mostly traded on centralized exchanges. There's literally a lack of liquidity in decentralized exchanges or in DeFi, right? And this is the reason why we see here USDC stablecoin, they're really in the business to bring liquidity into DeFi. And they are currently the cryptocurrency, right, that is literally has double the amount, over 2 billion in DeFi, even twice as much as Tether, which is actually single-handedly the largest stablecoin in the space. So USDC has more trading volume than Bitcoin, Ethereum combined, 10 times more, right? And what does that tell us? It just confirms that literally we are The lack of liquidity is serious, right? Lack of liquidity is serious. And what is our strategy? We've discussed about MasterCard, Visa, JP Morgan's, MicroStrategies, BlackRock's strategies. They're all coming to address certain challenges. They're all on a mission. They're all here to accomplish things, right? And last time we discussed that Bitcoin can't do that on its own. Bitcoin on its own can't retain liquidity, right? It can't do all the things it can do right now with MicroStrategy, with JP Morgan, with BlackRock. BlackRock is the one that is accumulating all the liquidity for them, and JP Morgan is the one that is bringing all the volume and purchasing the real assets, right? And it's the government that is issuing all these options, approving all these options and futures tradings to bring a lot of institutional investors into the space. But what about retailers? What about us? How are we going to benefit from all this liquidity rush if, when we see here, most of liquidity is on centralized exchanges and not on decentralized exchange? And isn't the blockchain technology supposed to be on decentralized exchanges, right? So we see a big discrepancy here. So what is our strategy? How are we moving forward to address these liquidity challenges or inefficiency challenges or unsustainable staking distributions, all these challenges that we see in the space? Do we now see how important it is for us to address these challenges, because they are real challenges? All these financial institutions, they are here to solve those challenges. However, they are geared to institutional investors and high net worth investors. But what about a platform that is addressing the retailers' challenges? Now that we know that it's a 0.01% that control in the digital world, that control 27% of all digital assets, this is an alarm that we should take heed of. And this is how we are addressing that community, right? As always, we are focusing on the 4 challenges that we always talk about, always. And today it's supposed to really highlight and make it even clearer that everybody needs to have, every ecosystem supposed to have a strategy, supposed to have solutions to challenges, to have a mission, right? What's your goal? What's your aim? What's your end game? What are you addressing? What's the solution are you bringing to the table? And how is that benefiting the retailers? Because all these institutions, they're focusing on other institutions, but the retail is left alone again. But this is exactly the reason why we're using the smart contracts. We're using this blockchain technology to address these challenges in the space, because we know that as long as we are addressing these challenges, we'll be able to stand out as one of the cryptocurrencies in the space that are actually not having this amount of trades going out over the counter or being on centralized exchanges, but rather we want to bring trades, or we aim to bring trades into decentralized exchanges. Once you can do that, this is how you empower the retailers community. Keep in mind, retailers are the majority. Retailers account for 70% of all economic activities. So retailers, they are the majority. We are the majority. However, keep in mind, even though we are the majority, we don't control most of the digital wealth, right? We don't. It's actually the 0.01% that control majority of the wealth. Same in the real world. It's the top 1% that control most of the global wealth. And it's even worse if you go up to the top 10%. Now you're in the territory of 80%, right? Or 90% even. So we need to really understand that we are still in the early stages in this space. Everybody's positioning themselves. As we see, people are strategizing, addressing challenges. What are we doing as native crypto enthusiasts? What are our platforms doing? What are we developing that is addressing challenges as well? Like the traditional industries are coming in and addressing challenges and making moves in the space. This is exactly what sets us apart, community. And this is the reason why we focus so heavily on creating a pool of liquidity, because one thing I want us to know, community, is that if you don't create a pool of liquidity, if you don't address that, once this pool of liquidity starts drying out because you're too thinly spread out, and now we see why we depend so heavily on business cycles, on boom and bust cycles, on bull cycles. Why are we always waiting on bull run? Because we need liquidity to come into decentralized exchanges so that retailers can trade. But if you are from the very beginning already retaining liquidity using Uniswap, which is a decentralized exchange, and you're already accumulating liquidity from day one, as we are progressing through this cycle that is going to bring us a lot of liquidity, and we are focusing on one liquidity pool. So that means everybody that is trading our ecosystem tokens, there will be adding value to our ecosystem, right? It's not going to be traded through ETFs or over the counter, right? But it's going to be traded on decentralized exchange, and it will be transparent, and it will benefit the community. Why? Because the more liquidity we retain, that means more volume. More volume means more scarcity, and also more USDC distributions. And it comes full circle, and more trades will attract even more liquidity, and more liquidity will attract more traders. You get the idea, right? Now you create that flywheel effect that we always talk about, and that's the important thing. We are fortunate that we are early on in this industry, and while MicroStrategy strategy is being celebrated in the whole industry, and he's being hailed as a genius, he's still working based on the traditional monetary system. His strategy is based on debt, and it's depending on low interest rates, cheap debt issuance, and it's not scalable, and it's not something for the long term. You can't keep scaling debt, right? So we have to find other solutions. First of all, making it to be decentralized. Secondly, we also need to empower the community to be able to do the same thing. And this is where it comes in. So as we retaining liquidity, as we know, this will attract more volume. More volume will issue more USDC distributions to those who decide to stake and stabilize and bring stability to the ecosystem. Now, what will this do? This means that you'll be able to not only receive your USDC distributions, but you'll be able also to participate in the same activity that this smart contract is. You'll be able to also by yourself, if you so decide, to keep using your USDC to keep restaking it, right? You can keep restaking it and do the same thing that, and it's empowering the whole community to do that. So instead of just one company doing that for you and holding the Bitcoin for you, use the decentralized network, the blockchain technology, and empower everyone to be able to do that with their own wallet individually. Have access to be your own custodian. We spoke about this. Have control over your own asset. Be your own bank. Have dominion over your own decisions that you want to make. Be informed, educated, and inspired so that you're not swayed by emotions and sentiments. This is the empowerment that we're talking about. And then you'll be able to do the same thing that we hear, but without having to take on debts, right? Just based on the network effect and the flywheel effect that we have based on this blockchain technology. And the more liquidity we retain, the more volume we'll get. And this USDC that we issue out to the stakers, now you'll be able to do the same thing without having to go out and take on debt. You'll be able to just restake, right? Just restake if you so decide, whatever you decide to do, right? Our strategy here is that we want to empower the community. We developed something that is based on solving challenges, solution driven. We identified these 4 challenges in the industry, like we always talk about it: lack of liquidity. We solve it by retaining liquidity. Inflation, we solve it by banning supply. And then unsustainable staking distributions. You need incentives Without incentives, you can't really, you need to incentivize the community, right? They have to have a reason to bring stability and bring liquidity into your ecosystem. And we do that efficiently by USDC distributions. Where this distribution is coming from the trades that are happening on Uniswap. Simple as that. That's where they come from. And the more liquidity we can retain, and we do that in one space, one place. We have one pool on Uniswap, and we are retaining liquidity in that one place. This is exactly why you saw Uniswap leaving Ethereum and building their own blockchain, right? Because they're on 25 different blockchains. Actually, we can see it here. If you come here and you go to Uniswap, actually on 26 different chains, right? And how this is inefficient. So this is why they decided to have their own uni chain and pool all that liquidity together. Who else is doing that? You have to be in the business of liquidity. We all know that by now, right? What we see here is also with US Treasuries, right? BlackRock, they're doing it. Liquidity fund, it's very important. You have to find a way how you can put a liquidity pool together. And then this will attract trades, right? And it has to be decentralized. Once you can attract trades through liquidity and you use your volume efficiently, that means that those trades are going to retain even more liquidity. And that will cause scarcity, accumulate more USDC for the stakers. And this is how we create that feedback loop, flywheel effect. And this is how we empower the community to do the same thing that is being talked about all over the news, but now you can do it on your own. You have your own wallet, your own bank. You can restake however you want, or you can use it, load it up to your MasterCard or Visa card, whatever you want to do, and use this technology the way it was supposed to be to empower the retailer. We have all the rails out here, and we have the news that is out here that is liquidity is about to enter the space. We see Bitcoin always leads the road, hitting all-time high as we see 98,000 right now. It always starts with Bitcoin, and then it goes over to Ethereum, and then it rolls over to everybody else. And because we are on Ethereum, once Ethereum starts running, we are all in good shape as well. Now, all of this tokenized, all of this ETF boom and all of this that we are seeing, guess what? Where are they going to be traded? Now we have to ask ourselves, where is all these tokenizations and tokenized ETFs, where are they going to be traded? We already saw even these payment rails, these infrastructures, they're all built on Ethereum. They're over Ethereum, right? One of the most actively used open source blockchain. So Visa is on Ethereum, MasterCard is on Ethereum, BlackRock, JP Morgan, they're all on Ethereum. And these are the largest players in the financial industry, and they chose Ethereum. So imagine all these tokenizations that are happening, all these volume that we see that are happening, this will be tokenized. So all of these stocks will be tokenized. All of these ETFs will be tokenized and traded where? On Ethereum. They're going to be traded on Ethereum. And this will cause a lot of volume. It will bring a lot of liquidity, and we'll be ready to retain all of that because we are built ready from day one to retain all the liquidity, to be scarce, to be sustainable, to accumulate sustainable staking distributions, and to do it efficiently by using our volume efficiently. This is our strategy. The topic of today was, what's your strategy? And how are you using this blockchain technology efficiently to address challenges that you identified? Turn these challenges into solutions. That's the message for today, community. And this is very important for us to understand that we are at the crossroad right now where all what we've been waiting for now is happening right in front of our eyes. And Bullrun always start with Bitcoin. Obviously, it's the largest. It's 60% of the entire industry is on Bitcoin. So all these all-time highs that we see, this is good news for us. And we see Ethereum also starts running. It's up 9%, almost 10% within the last 24 hours. This all is happening. We already know how pro-crypto the government is now, the US government. We know how institutions are adopting crypto. Like we read today, we see how rails are being prepared, financial rails, through the major institutions and payment processors. We see how now next week, apparently, there'll be talks with Microsoft, right, as well. When they jump on as well, this will bring euphoria, even though it's not going to directly affect our liquidity because all these trades will be over the counter, but at least it will just bring more awareness to the crypto space, more legitimacy, and so on and so forth. But we have to do the heavy lifting. With we, I mean we, the crypto natives. We as we in the crypto space, we have to identify platforms that are literally in the liquidity business. If you're not in the liquidity business, you're missing out, and you'll be a slave of these 4-year bull cycles. But if you have a large decentralized pool of liquidity, you don't have to wait 4 years. This is why you see these large ETFs, they're trading Monday to Sunday, January to December, without the need of these bull cycles. They're always trading because why? They have deep liquidity 24/7 from January to December. If you can do that, and this is why we need this boost, we need to make the most out of this liquidity rush during this bull cycle. We want to retain liquidity in one pool, one place, on a decentralized exchange. Once we can do that, then we don't have to worry about the 4-year cycles, waiting for another bull run and all that. And we don't have to worry about the strategies of accumulating debt to do all of that either, right? We are not debt driven, we are liquidity driven. So this is the session for today, community. I hope the message came across, and I hope there's something that we were able to take away from today. If you bear with me, let me share my screen once more and come to your comments. All right. All right, community, let me come to you. Queen Patricia says, good evening, family. Good evening, Mr. Steve and Mama Wino. Thank you yet again for your commitment, and congratulations for the BRL 2nd anniversary. We continue to pray for our ecosystem. Thank you very much, Queen Patricia. It's always a pleasure to see you in the community. And yes, we came a long way. 2 years in the crypto space is it's a long time, you know. And to make it this far and to come out of the bear market and have a proven track record, have a proof of concept for 2 years, that's a major milestone. So we can all really be excited about this. Queen Beatrice says, good evening, Queen Mother, Big Brother Steve, and the Bullrun community. We are back for another accelerating session with our depth. Let's get educated, inspired, and well informed. Thank you so much, Queen Beatrice. I hope you had something to take away with you today. I hope there's something that you benefited from today. My great brother Theo says, greetings, my great brother Steve, dearest great Queen Mama Wino, and my wonderful Bullrun family. I'm grateful to be here with you all on these fantastic live sessions. We are glad to have you with us also today, Brother Theo. Queen Lati says, greetings, Bullrun family. Another exciting moment for us, community, to sit down and listen to our crypto expert as he unpacks what he knows best. Thank you, King Steve and Queen Mama Wino, for being visionaries. Thank you, too, for being a visionary yourself, because it takes to be one to know one and to be part of this community, be part of this ecosystem, and we appreciate your commitment, your consistency as well, Queen Lati. Very much appreciated. Who would have known that by this time around we will be fundies in the blockchain industry and waiting to hear more on the blockchain strategy. Take us on, Brother Steve, as you have always done it. Thank you so much, Queen Lati. You're very, very much appreciated. We can all really be, excited about what's happening right now. We don't have to say, okay, it's coming, it's already here now, and we're waiting for our turn, right? And the difference between Bitcoin and Ethereum is that Bitcoin is has faced less scrutiny and less regulations than the more complex Ethereum, right? And now that we have a pro crypto, regulators or in the House, right, and in the Senate and in the government as presidents, these regulations, once they are really rolled out, there's more clarity about them, especially in terms of custody, exchanges, stable coins. Those areas we'll see, because all of that, like we saw today, stable coins, a majority of it is on Ethereum. And Ethereum needs clarity, right, in many aspects. And once that clarity is out here, we'll start seeing major influx coming in as well, specifically on the institutional front as well, just like it happened with Bitcoin, right? And that's what we can also look forward to. And that will bring also a lot of enthusiasm, a lot of eyeballs to Ethereum. So let's just be patient, wait for our turn. And things are rolling right like they should. And once these regulations have more clarity, we'll see more movement on the side of Ethereum as well. Queen Aloshi says, here we come again, humbly to be educated, inspired, and informed. Thanks, Brother Steve and Mama Wino, for your consistency and commitment. God bless you. May you also be blessed. Thank you so much for your consistency. Thank you for taking part in these sessions consistently as well. You're very much appreciated. Queen Kinole says, excited to get informed tonight. I hope that you had something to take away with you tonight, Queen Kanole. Brother Lincoln says, evening community, Brother Steve, glad to be part of this session. Looking forward to learning more. Glad that you were able to participate today, my brother. I hope you are well. Queen Patricia says, hello family, Brother Steve, Mama Wino. We can't wait for another hot session. Glad that you were able to participate today, Queen Patricia. Very much appreciated. Queen Debbie says, greetings community, greetings Brother Steve and Queen Mother Wino. I'm also excited to be here. Thank you so much, my brother, for all your efforts on educating us. May God reward you accordingly. Thank you so much for your well wishes. May you and yours also be safe and blessed. We appreciate all of you for being part of these sessions consistently. Queen Marilyn says, excited to tune in and learn. We are happy to have you here, Queen Marilyn, with us. Queen Cozy says, greetings, Mama Wino, Brother Steve, and the entire Bullrun family. Happy Thursday, everyone. Looking forward to a great educational, inspirational session. Thank you, Brother Steve, for your insight. Thank you also, Queen Cozy, for participating, for being consistently participating in these sessions as well. Queen Blessing says, evening family, Mr. Steve, our Queen Mother Wino, glad to be here to learn more about blockchain. I hope that today's session gave you something to take away. And like we always encourage you to do your own research, take these sessions as a point of reference and to further go down the rabbit hole. And we always aim and strive to verify things that we read. Even if we use articles, we always like to cross-reference, cross-verify with other sources. And this is what we need to do, because clarity is important. To be informed is power. To have knowledge is power. And the more we are knowledgeable and informed, the more powerful we are, not just as individuals, but as a community as well. What a topic, Mr. Steve. I am more than grateful for always having something new to teach us. May God give you more strength to keep you knowledgeable. We love and appreciate you together with our Mama Wino. Thank you so much, Queen Grace. You're very much appreciated. I'm glad that the topic got you excited and in anticipation also to listen to it. Thank you for tuning in. I hope that there's something that you're able to take away from it. Queen Val says, hello family, happy Thursday. Now that things are slowly warming up, so excited to hear more from our King. Thank you so much, Queen Val. Always a pleasure. We appreciate your consistency very much. Thank you for your feedback, and I hope that you're able to take away something today as well. Queen Marilyn says, thank you, Brother Steve. Excited to tune in and learn more. Thank you, Queen Mother. We love you. You're also very much appreciated, community. Very, very much so. Queen Val says, to all our new members, feel welcome and join our Telegram communities. Let's do so, community. For those that are new, that are not part of our community yet, feel free to join these links. You have our Killer Whale link, we have Survivor, and we also have Bullrun as well. So feel free to join our communities. We are very, very active community on Twitter. We are very active, as you see here on YouTube as well. And then also on Twitter Space, we're very active. And then on Telegram on Saturdays as well. So feel free to participate or be part of our community. Queen Tomeletso says, greetings to our developers and the Bullrun family. Appreciating the education we are getting and ready to be informed. Very, very excited to have you all here, community. Thank you, Queen Tomeletso, for your feedback and your input. Queen D says, greetings to Steve, great Mama Wino, great Queen Mother Wino, and the entire Bullrun family. Greetings right back to you too, Queen D. I hope you and yours are doing fantastic. Uncle George says, greetings to Steve, Mama Wino, and Bullrun community. Psyched and ready for updates on ongoings on the industry. Glad and privileged to be part of the anticipated Bullrun empowering experience. Absolutely, Uncle George. We are finally where we always have aspired to be, and we see this early bull cycle take off through Bitcoin fast. Bitcoin is always the first one to run, and due to its dominance, like market dominance, it's always the first one to run, and then it trickles down to everybody else. Second in line is Ethereum. Ethereum is extra because it also still waiting for the regulations to be cleared and to bring more clarity for exchanges, custodians, and also for the stable coins as well. And because majority of that is on Ethereum and also in DeFi as well, like we saw today. So all of that will bring so much more awareness, attention, and liquidity into the onto the Ethereum blockchain, as it already has. And this will, of course, also trigger a run for Ethereum. And as Ethereum is running and receiving all this liquidity on its blockchain, that will also benefit us, because a rising tide lifts all boats, right? My great brother Abdullahi says, get ready for liftoff. Warm greetings to our amazing community. Thank you very much, brother Abdullahi. Warm greetings right back to you as well. I hope you and yours are doing fantastic. Queen D says, brother Steve, your education, experience, and understanding in crypto is unmatched. Only us in the Bullrun ecosystem understand. Nothing catches us by surprise. Thank you so much, Queen D. That's the whole idea. We aim to really be on top of the news, on top of current events. It's a very dynamic industry. There's so many changes going on. And the key is not to wait for the news on the mainstream, but to anticipate things, to see things before they happen. That's where really the magic happens, right? To be able to anticipate, to be able to see things before it's mainstream. And this is what we've really been anticipating and forward thinking as well. And even when we're developing this platform, we started by understanding the industry first, understanding the monetary system first. What is money? What is finance? What are the challenges? Identifying those and then addressing them. It's tedious, it takes a lot of time to analyze, understand all of that. However, in the long term, because we're in it for the long term, it's all going to be worth it, right? And this is what it's all about. Queen Tabi saying, greetings to you as well. Queen Ernest says, greetings, beloved Bullrun family, Mama Wino, and our champion, Brother Steve. I am glad to be back here again for another exciting session. We are very delighted and happy to have you here with us. Queen Ernest, Queen Mother Winner herself says, greetings to all our amazing queens and kings. The clock is ticking and the anticipation is high. We are about to experience memorable moments, family. Patience and focus are the keys to success. Couldn't even say it any better. This is facts. This is very true. It's all about patience now, focus, and we've worked so hard to get to where we are as a community, and we've been anticipating this for over 2 years now. Now that we are here, sometimes the best thing to do is nothing, right? Let's just continue our focus, our daily routines that we do with the tweets, bring engagements, bring awareness to our industry, our ecosystem, participating in these community events, listening in, tuning in. This is exactly what we should continuously do as we are inching ever closer to where we need to be, right? And we see things unfolding right in front of our eyes, and things are happening in real time. And this is beautiful to see. So nicely said. Thank you so much, Mom, for your feedback and input. She says, thanks, Steve, for guiding us through this exciting journey. We are all in this together. That's the beautiful thing about all of this, is that we are all in this together. This is our journey that we are privileged to be part of together as a community. Queen Nancy says, happy Thursday, Bullrun community. I'm very excited to be part of these great teachings. Thank you, Steve, for taking your time 3 times a week and educating us about the crypto industry. Thank you very much as well, Queen Nancy. You're very much appreciated. That means that you're also around at least 3 times a week. You being a queen, you're even around more times, because queens have a Sunday also session, a Friday session, daily Zoom sessions. So it's also means that you are consistently around and part of these events as well. Queen Patricia says, thank you, Steve, for the enlightening teachings. Thank you as well for being participating in these events and being part of this ecosystem. Queen Chinoga says, greetings, family. Thank you, Steve, for another exciting session. Thank you as well for participating in these events. Queen Grace says, greetings to you, our dev Steve, Queen Mother, and the BRL family. Very powerful topic. More of God's perfect grace to you, Steve, and the community as we journey together. Absolutely. Thank you very much, Queen Grace, to you as well. Very much appreciated. Queen Super says, greetings, family. Thanks, Brother Steve, for the teachings. God bless you. May you also be blessed, you and your families. Thank you for participating today as well. Queen Mother Caroline says, great informative session. We are on our way to a great blessing. We must stay focused. Beautifully said, Queen Mother Caroline. That's all we need to do. Let's remain focused. Let's remain hungry, vigilant, consistent as we are. And step by step, we'll get to where we need to get. The beautiful thing about all of this is that we're working together, right? We're all in this together, and we're all doing our little part in this and contributing to the growth of our community. And this is the beautiful thing about this. We're in this journey together, right? Queen Val says, let's hit the like button, family. As we know, this engages the algorithm and this reaches as many people as possible. Very, very important for us. Queen Mother Caroline says, thank you, son, and my dearest sister, for this great opportunity. Thank you, too, for being part of this beautiful journey with the community, with all of us. Very much appreciated. Brother Eric says, great and informative session. Glad that you had something to take away with. Brother Glenn says, these are exciting times. Thank you, Brother Steve. This is an amazing information. There's amazing information, and congratulations on hitting that 2-year mark with BRL. Absolutely, congratulations to all of us, because it took all of us to be where we are today. Queen Louisa says hello. Hello back to you as well. And Queen Gladys also says greetings to all. Thank you, Brother Steve, and Mama Wino, and our community at large. Thanks for that wonderful session. Happy to have you. Thank you so much, Queen Gladys. You're very much appreciated. We are happy and delighted to have you all here with us today as well. So with that said, community, it was a lengthy session today. There was a lot to unpack. Thank you for all your feedbacks. Thank you for participations. Those who have not yet engaged with the tweets, do so that we can reach as many people as possible. Even after this session, let's ensure that we engage with this session today so that it will reach as many people as possible as we bring, or rather aim to bring, awareness to our industry as crypto enthusiasts, and also bring awareness to our ecosystem as well. With that said, community, I want to thank you all once more for all your efforts. Thank you, Queen Mom. Love back to you all as well. You're all very much appreciated for all the efforts. Thank you, Kings. Thank you, Queens, for all your efforts. Very, very much appreciated. Step by step, we get into where we need to get. Things are unfolding perfectly for us. It's for us to reach for our aims, for our goals, community, and we'll achieve this as a community. The beautiful thing about our ecosystem is we don't have to outwit each other. We don't have to backstab, step on each other's necks. We work together and we succeed together and we win together, right? So let's continue what we've been doing diligently, consistently, community. I want to wish you all a wonderful rest of your week. And until we meet again, community, thank you very much, everyone. Bye-bye, everyone.